Hello everybody, it's Matt here, and today we're going to be talking about something that I think a lot of people are getting completely wrong. If you spent any time on YouTube, TikTok, X, or pretty much anywhere else in the crypto over the last few days, you'll have seen the headlines. XRP is down, the market is scared, and people are panicking. The usual doom and gloom merchants have crawled out from under their rocks and are telling everybody the sky is falling down. But what if I told you that the latest on-chain data suggests something very, very different is happening? What if the latest XRP sell-off isn't actually being caused by whales dumping their bags at all? Because according to new blockchain data, that's exactly what may be happening. And if that's true, it changes the entire narrative.
I am not a financial advisor. This video is based solely on my opinion on what I'm personally doing in this market. I also want to let you know that some of the links below and in the descriptions are affiliate links, meaning I may get a commission, but it will be at no extra cost to you. Please remember that under no circumstances will I ever contact you and ask you for investments. You can confirm all of my real social media handles in the description and also at milkshakematty.com. This content is for educational and entertainment only, and I'm not a financial advisor.
Before we get started, a very quick message from me, because if you've ever looked at trading bots and thought that looks complicated, I wouldn't know where to start, and I don't know anything about an automation, then I've got something for you today for free. We've just launched a completely free TradeBot Pro Course, and I've developed it in conjunction with Paula Talks Crypto. The goal is simple. Take somebody who knows absolutely nothing about trading bots and get them live and running in under 30 minutes. No experience required, no technical knowledge required, no coding, no nonsense. Just follow the course step by step and you'll be up and running. Even better, as part of the course, you can start trialing these bots completely free for 14 days. No credit card, no hidden catches, no payment details. Just learn, test, and decide if it's something that you like. While YouTube and TikTok are full of people crying because the market is red, our community is learning how to automate parts of their trading and remove emotion from the process. We also, inside the course, show you real results from our FAS High signals, which can be copied automatically through the bots as well. You'll find the link down there in the description, or head over to cryptowolfpack.co.uk and click on the free course. It's completely free. Go and take advantage of it. Now, let's get into this XRP story today. So here's what's happened. XRP has seen significant selling pressure. Prices have been moved lower. The sentiment online has turned negative. And as always happens in crypto, people immediately start looking for someone to blame. The first thing many investors assume is that whales are selling. After all, that's normally what causes major drops. Big holders can move huge amounts of XRP onto exchanges. They hit the sell button, retail panics, and price falls. It's a story we've seen countless times before, but according to the recent on-chain data, that's not what appears to be happening this time. Researchers have been monitoring exchanges inflows, and for anybody new to crypto, exchange inflows simply refers to coins being moved onto the exchanges from their cold storage wallets. Now, some of you might not know why that's really important, because what it really means is, generally speaking, when somebody wants to sell crypto, they have to send it to an exchange first. The more coins moving onto the exchanges, the greater the potential selling pressure that's going to arrive. It's not a perfect indicator, but it's one of the most useful metrics that any of us can use. And this is where things start to get interesting, because the latest data shows that XRP holders are actually sending fewer coins to the exchanges, not more. In particular, transactions involving over 1 million XRP have declined. That means the biggest holders in the market do not appear to be rushing for the exit doors just yet. Now, that is important, because if whales aren't selling, then what exactly is causing this drop? And this is where many newer investors might start to get caught out. You see, modern crypto markets are driven heavily by leveraged trading. People aren't just buying XRP. They're buying XRP using borrowed money, sometimes on 10x leverage, 20x leverage, or even 50x leverage, and occasionally even more. The problem with leverage is that when markets move against you, positions get liquidated. And when liquidations happen, exchanges automatically close those positions. That creates additional selling pressure, which pushes prices lower, which triggers more liquidations, which pushes prices even lower. And before you know it, you've got a liquidation cascade. And what would be the result of the liquidation cycle like that with a cascade? Well, the charts would look horrific. Everybody would be panicking. People would assume whales are dumping, but in reality, it may simply be traders getting wiped out. And that's exactly what this latest data appears to suggest. Now, why does this even matter? I can hear some of you in the comments saying this already. It's because there's a huge difference between a whale-driven sell-off and a liquidation-driven sell-off. Whale-driven sell-off can indicate that major holders have lost confidence. A liquidation-driven sell-off, often suggest the market can become over leveraged and needed a reset. These are two very, very different situations. Think of it like a pressure valve. And sometimes markets simply need to blow off excess speculation. Once that leverage has been flushed out, healthier prices action can return. And that's why many experienced traders pay attention to liquidation events. They understand that sometimes the worst looking candles can actually create the best opportunities. Now, let's be clear, this doesn't automatically mean that XRP is about to moon tomorrow, no matter what some of the moon boys over on YouTube will be telling you. I don't have a crystal ball, and neither do they. Nobody does. But what it does mean is that the narrative being pushed across social media right now may not be entirely accurate. Because if whales aren't dumping, then one of the biggest bearish arguments suddenly becomes much weaker. That's something worth paying attention to, especially when fear levels are where they are right now. And right now, the fear and greed index is sitting at 9 to 12, which is extreme fear. One thing I've learned over the many years in the markets is sentiment often reaches its most negative point right before things start improving. When everybody is bullish, risk is usually higher than people think. And when everybody is terrified, like now, opportunity is greater than most people even realize. And right now, fear and extreme fear is absolutely everywhere. This is also why data matters, because too many investors make decisions based on purely on emotions. Red candle appears, they panic. Green candle appears, they get excited. But professional investors and institutions look deeper. They examine liquidity, they analyze flows, they study behavior, they look at what money is actually doing, not what social media is saying. And that's exactly why I find this subject so interesting when I was looking across X and seeing everybody saying that whales are dumping, because it challenges the dominant narrative. It forces us to ask better questions and it forces us to think. And that's something we need more of in crypto. Now, before we finish, I also want to quickly mention the UK Crypto Podcast, because our latest episode has just gone live and it's a special one. We sat down with the former global vice president of Binance for a fascinating interview. We discussed the crypto industry, what it was like working inside the world's largest exchange, the challenges that Binance faced, and perhaps, most interestingly for UK viewers, what it was like trying to do business with the FCA and the UK government. There are some brilliant insights in there that you simply won't hear anywhere else. If you enjoy crypto discussions that go beyond price predictions and Moonboy headlines, you're going to love that episode. I'll link the full UK Crypto Podcast playlist at the end of this video somewhere above my head so that you can jump straight in as soon as this video finishes. So let's wrap this up. XRP has fallen, fear is high, social media is panicking, but the latest blockchain data suggests something very important. The evidence does not currently point towards a major whale dumping. Instead, much of the selling pressure appears to have been driven by liquidations and leverage traders being flushed out. Could prices go lower? Of course they could. Anything can happen in crypto. But if the whales aren't selling, then perhaps the story isn't as bearish as many people are making it out to be on TikTok and on X. As always, make sure you do your own research. Never invest money that you can't afford to lose, and don't let emotional headlines make the decisions for you. If you enjoyed today's video, please smash that like button, hit subscribe to the channel, and let me know in your thoughts in the comments. Do you think XRP has already bottomed out? Or do you think we have further downside ahead? I would love to hear from you, and I read every single comment. Thanks for watching. I'll see you on the next one. And remember this, the strength of the wolf is in the pack.